Meg Energy releasing Q3 earnings last night, but it was pretty irrelevant in the sense that shareholders have approved that takeover by Cenovus. That was after a 5-month saga. It took a while for Cenovus to get enough support for the deal. Now, this apparently makes Cenovus the second biggest oil and gas producer in Canada. Let's get more from Cole Smead, CEO of Smead Capital. Cole, thanks very much for joining us. So Cenovus now surpasses Suncor in terms of production volume?
Yeah, and there's some other metrics we should really take note of as investors. One would be, if you look at the per flowing barrel, what's been paid, it's about 70,000 Canadian dollars or about 50,000 US dollars per flowing barrel for MEG. So you should kind of benchmark that number as we move forward to look at other transactions. Mm-hmm. Another thing, Andy, would be about 5 to 6% of MEG's revenues, or pardon me, if MEG's current market cap is what's been targeted as synergies in this deal. So I think that's another interesting metric. I was visiting with another oil company last night who had done a deal in the last few years here in the U.S. and I asked them, what did you save of your target's G&A? And they said they took the G&A to zero in the target. And that's what's going to commonly go on in these oil and gas businesses. So I just point those out because those are things we should really watch for going forward. I think the other thing, we're always learning something as investors. And what really shocked us and our investors through this process is, Carney was interviewed the other day at the Canadian Club, and he was asked about, why should foreign investors be interested in Canadian markets? Mm-hmm. And he said the rule of law. Well, what I find interesting in the MEG saga, now that it's ended, is looking back, we learned that the rules weren't really rules. Oh. They were merely guidelines, okay? And I say that because, like the plan of arrangement, the 2/3 vote, we found out that it can be lowered by 9.9% under Canadian law. And then further things like transactions among minority investors can be different under Canadian law. And so I just say that because I think those laws were taught to be guidelines, not actual rules. Mm-hmm. And I think investors will just pay attention to that going forward in future transactions.
We can't get into all of it, Cole. And of course, we don't have Cenovus' side here. But I think you said, so MEG shareholders, there had to be 2/3 approval. But then Cenovus pushed through a big purchase of Cenovus shares, Strathcona.
Correct.
I'm not sure if it was Strathcona.
Which means, Yeah, even though the law doesn't say that's allowable or not, we just learned that is allowable. That's going to pass and go through. So that's just something that investors should pay attention to going forward on any of these transactions. It's not a 2/3 number needed anymore. And then the second part is obviously Strathcona as a minority did a signed transaction with, who is the acquirer of MEG. And so we're also watching different interests among minorities. And so I think investors should just pay attention to that because, again, it's going to point to in any future transaction what is going on with the board of the target because that is where that was allowable.
That's interesting that they broke whether they broke new ground or not, but it illustrated a loose interpretation of that 2/3 rule.
Correct.
Yeah.
Correct.
What about Adam Water of Strathcona? He in the end dropped his opposition.
He did, but I think he made out like a bandit in so many respects. The Saskatchewan asset looks like a steal. And so, I mean, as you can see yesterday, Strathcona is hitting a new all-time high in the stock, and it shouldn't be surprised. They're about to go do their special dividend. I think the other thing is, as we're watching, there's talk of Baytex selling their U.S. assets. We don't own Baytex, but I just say it because if you look at what's left in the RemainCo of Baytex, if that goes on, you effectively have, what would be a heavy oil business and a Clearwater business, the kind of assets that other people in the Clearwater would be interested in, and, other assets in heavy that would be interested too. So I think we're going to see more deals. I think they're going to pick up. But again, I would go back to that idea of G&A. If other oil and gas businesses can tell us they take the G&A of targets down to zero, what does that mean for less scaled operators than MEG? In MEG's case, they did 108,000 barrels. That was a big number to take off the board, to your point. Everything down from there isn't 5 to 6% of market cap and EBITDA savings. It's going to be something higher as a percentage of the market cap. So, do all these assets need to have all these boards and all these executives? The answer is no. In Canada, there's only 2 railway companies. And what did that mean? As every other railway company went away in Canada, you got scale. Things like general administration became your scale in the long run, and fewer boards and fewer executives became the win of the shareholders.
I guess there's going to be job cuts, though, aren't there, in these in these takeovers, or will they be politically a headwind?
Well, it won't be people in the field because these are asset businesses. So right. The people that are great at running the assets in the field, they're the all-stars of this industry. What are you really talking about when you say that, Andrew? A bunch of white-collar people that, they're intelligent to go find a new job, and we shouldn't cry about them that much. It's, I look at this as, people sitting in corporate offices are expendable. People sitting out in the fields that work these real awesome blue-collar jobs for the industry, they're the rock stars of the industry.
They're the people who are out there in minus 30-degree weather, okay?
Yep.
In the mud, and let's put up a 5-year chart for Baytex. So they bought those Permian assets years ago. I don't know if the market ever warmed up to that deal, and now they're talking about selling them off. Do you think, is Baytex a decent buy right here, do you think?
Yeah, I think the real question just comes down to what their U.S. assets end up being worth, because those are Eagle Ford assets. And so, what comes out on that, if a $3 billion number is like a true number on that, I think you're going to see interest in the RemainCo assets, like I said. In the case of who we own, I'm sure Tamarack Valley would be interested in their Clearwater assets. They have some overlap with them, for example. I wouldn't be surprised if Strathcona was interested in some of their heavy oil assets. So I just say that because I think we're going to continue to see deals pick up. There's a definite bid down here south of the Canadian border. In the U.S. right now, there's transactions going on pretty regularly, and I think we're going to see that continue. And I think that will also continue to play out in Canada. We have to get more scale in this industry. These have to be more shareholder friendly. And the primary way to doing that is drive higher returns through lower costs. And that is, that idea of general administration.
Maybe we could put up a 5-year chart for XEG. I use it as a proxy for the Canadian oil and gas stocks. I know it's dominated by the oil sands names. But, given the weak oil price, it's interesting how well that has done.
Yeah, it is, but I think oil stocks have traded more in economic fears down. Right? You look back at April, people were scared about the economy and what was going to happen with tariffs. And as you can see, we're not that far off that same oil price as the spring. And to your point, the stocks are all much higher. And so what's going on is the valuations of these stocks are climbing because people are recognizing the value of the business has less to do with what goes on currently in the economic environment and more about what's causing to be a possible scarcity of future supply of oil. Use OPEC Plus. They have a little over 1 million barrels left of excess capacity that they can still bring back on market. And Andy, that's less than 1 year of future demand. And so where is the marginal barrel going to come from? It doesn't look like it's going to come from the Permian like it has in the past. Canada can continue to produce more. But I just say that because it's not like we have the ability to grow 10 million barrels over the next 10 years per day. It looks more likely we can maybe get 4 or 5, and unless prices go up, it's going to be really tough to get 10 over the next 10 years.
Cole, always great hearing from you. You always bring us a fresh angle on the oil industry. Really appreciate it. Cole Smead, CEO of Smead Capital.